because you need to know how you're going to get out before you go in. It's like walking into a burning building. Hey guys, welcome back to the channel. So you've seen the title to this video. It's called YOLO investing. And I call it that because this past week and what I've been seeing over the weekend and certainly today being Monday, you're going to see this tomorrow on Tuesday. It feels as though there is this feeling in the air that now is the time to really get stuck into stocks like AMC, GME, Nokia, and people like that. And that's okay. I'm all for enthusiasm to invest. In fact, enthusiasm to invest is fantastic. But there seems to be no rationale, no reasoning. It seems to be like an impulse reaction because there's something exciting going on right now around Wall Street bets and the hedge funds, and we can finally get one over on the big guy. And I get that sentiment. We'll talk about that a bit later on. But with that being said, there still needs to be some level-headedness going into this because reasoning seems to be out the window right now, and it just seems to be a trend. And we need to talk about this. So let's talk about this. All right, so if you're completely unfamiliar with what's going on at the moment with GameStop, AMC, BlackBerry, Nokia, Bed Bath & Beyond, then you need to go and watch this video right here because that will catch you up to speed as to what's going on in your kind. This will make sense. What I'm going to cover in this video is going to make sense. Now, look, I've watched a lot of videos on YouTube over the last 3 to 4 days, particularly over the weekend. I research a lot of stuff before I do videos on them. And I've come to notice that this is very much an exciting thing right now. We talked about the retail investor, the little guy finally getting one over on the big guy. And look, part of me is actually up for that. I like it. Wall Street has traditionally and always historically been reckless. And you just need to have a look at 2007, 2008. What caused the crash back then, the credit default swaps, were being repackaged and resold the minute they got a bailout from the US government. So nothing ever changes. And this is a prime example of them overstepping, overextending, but being caught by retail investors who now have the power, the ability to organize online and invest in the market using the likes of Trading 212, Robinhood, Free Trade, and all of these apps that have basically appeared in the last 3 to 4 years, giving retail investors power. And I am all for that power. Power is good. I crave that power. You know, giving it to the people is fantastic. However, in this circumstance, whilst the power is good, I question whether the power is being used responsibly. Let me explain what I mean by this. I've been sat in the Reddit groups today, looking at comments and just reading through some of the things that are being said and some of the sentiments that I generally get from the group is, you know, everybody is out to make a load. It wants to make money. And that's fine. Everybody wants to make money. I want to make money on this channel. You want to make money in whatever it is that you do, right? Money is important to the way we live our lives. It helps us build for the future. I also get that. But that, for me, is the main problem. The talk is about making money. There is no talk about the downside risk to this. And I've watched a number of lives. Over the last week or so, there have been lives every single day. Channels on YouTube doing marathon live sessions with other YouTubers coming on talking about this situation right here. And there's a lot of focus on making money. And there have been some fantastic stories of kids who invested in, you know, I think AMC, I think was one of them, managed to pay off his student loan. Fantastic news. Amazing, amazing news. But whilst people are making money, people also have to lose money. Now, the dynamic as it currently sits is that the hedge funds have lost a shed load of money. And that's great if you're in that camp and you believe that the little guys finally got one over on the big guys. And I'm all for that. However, where we're heading this week could potentially mean that people lose money. And even with hedge funds losing money, we have to understand that the hedge funds lose money, but the hedge funds look after people's money. So in the scheme of things, People lose money. And I'm really concerned about this because whilst there's a frenzy, whilst there's this excitement, there's this sense of going against the establishment. I like that. I get it. We're not focusing on the fact that real people are going to lose money and real people are going to be left holding the bag for this. And it's going to be as a byproduct of something that unfortunately could not have been avoided. Nothing could have ever predicted that this would essentially happen. So if you are invested in this kind of stuff and you want to go all out YOLO investing because that's just the way you're built, you want to take chances, you want to make the most of an opportunity as and when it comes along, well, I want to spend a few minutes just talking about a couple of things that you absolutely need to bear in mind. And look, I'm really, really honest. I am on YouTube talking about investing, talking about finances. I happen to be someone who's worked in the industry for 15 years. I happen to be someone who is qualified as a financial advisor. I've worked in wealth management. I've worked in Canary Wharf. I've worked in the world of investments. So I have a little bit of experience, more than some people who are on YouTube talking about this stuff. And one thing that I've certainly noticed is on these lives, and this stuck out to me today. This stuck out to me today because when the markets opened this afternoon, most people have got a lot of money in GME because that's the stock that has just gone absolutely nuts. And whilst a lot of these YouTubers were able to get in early and are sitting on decent profits, some of them have cashed out, some of them are still being involved. But because the show is talking about GME and AMC, you're still having a huge influx of people buying stocks in this company at what might be a really bad time. And this stuck out to me today because there were a number of questions like, what should my exit strategy be? People who have invested in GME in the first place and AMC in the first place asking, what should my exit strategy be? And these channels are saying, well, don't talk to us. We're not financial advisors. We want you to make the best decisions possible. But you need to have an exit strategy. Okay, but what is an exit strategy? In my opinion, if you invested in this kind of stuff and you invest, period, and you don't have an exit strategy, you've done this completely wrong. Because you need to know how you're going to get out before you go in. It's like walking into a burning building. Like, you're going to have to plot your route. Okay, if anything happens, we're going to have an exit to the left, we're going to have an exit to the right, or we're going to do X, Y, Z if our primary exit out of the building gets cut off. They have an exit out of the building. They know that they're going to run into this burning building, but they're going to be able to get out. Same thing applies when it comes to the stock market, guys. Whether you're investing in good times or bad times, or what seems to be good times or seems to be bad times, you have to have an exit strategy. And I find it problematic that people are watching a live and there's 25,000 people on this live this afternoon and still going on right now as I record this, asking about an exit strategy. And these YouTubers who have already made their money on these stocks are just saying, look, we can't give you financial advice. You need to make the best decision for you. And I get that because you can't give any financial advice. But this speaks to the larger problem and the larger issue that has been my fear all along, watching this through last week. That the people who are invested in this, following the trend of this, don't really know what they're doing at all. And this is where education comes so important. So in this video, look, let me just give you my 3 key points that I think are really important. And we're going to cut this video really short, and I hope that this makes sense because this is no joke. Real people are going to lose money here. And it's okay if you've made money, congratulations. But real people are going to lose money here. So YOLO investing, my rule number 1. Remember that this is not a game. I cannot say this clearly enough. This is not a game. If you don't understand how investing works, then this kind of stuff is not for you. You have no business looking at this kind of stuff. You have no business looking at investing, period. You would not go and sit down at a chessboard with a chess grandmaster, not understanding the rules of chess, and then betting your life savings or money that you have worked hard for on you possibly winning. And I know that may sound like a very obvious analogy to use. And people are saying, yeah, of course, Pete, of course I wouldn't do that. But that's what people are doing when they invest in the stock market and have no idea what they're doing. You are sitting at the table with a grandmaster at chess, putting your life savings into the game, thinking that you are going to win. You're not. The first thing you need to do before you sit down at a chessboard with anybody, let alone a grandmaster, is you have to understand how your pawn moves, how your knight moves, how your queen can move, and how you're meant to protect essentially the king. If you do not understand the rules of the game, you have no business playing that game. And if you take anything from this video, this should be the first thing that you take. Do not play chess if you do not know the rules of the game. Do not invest if you do not know the rules of the game. And this is where the problem kind of lies. And I may lose people here because they will think it's boring. Yeah, Pete, you've said this before and blah, blah, blah. But ultimately, if you don't want to take the time to educate yourself, to get the education, to take courses, I've got a course on here that costs £60. There are people throwing in £500 into the stock market on something that they completely don't understand, assuming that they're just going to win when they have a good chance that they're going to lose everything that they put in, but they don't want to invest £60. If you do not want to put the effort into investing into knowledge so you understand how you can manage your downside, and I preach this all the time, if you don't want to spend the time and effort to understand that, then you shouldn't be investing at all. You are the master of your own money and the master of your own destiny. Not me, not anybody else. So ultimately, it's your decision. But if you're going to go into these kind of things, remember it is not a game. You have to know the rules of the game before you sit down at the chessboard with anybody, let alone a grandmaster. And when you're going up against professionals, you're playing against grandmasters. My second rule, if you are tempted to YOLO invest, is, for goodness sake, if I can't talk you out with point one, then only allocate a portion of your money. A portion of your money. So if you've got £100 spare, go and allocate £20. Do not put all of your money into these kind of investments, these kind of schemes, especially if point one is you, where you don't understand what's going on, you don't understand how things work. Even if you do, it's still not advisable for you to go and put the majority of your money into these kind of investment opportunities. You have to allocate your money accordingly. You have to understand what level of risk that you're willing to take. For some people, they may decide £20. Okay, that's cool. I'm happy to take a higher level of risk with this £20. But please only put in a portion of your money if you cannot resist the temptation to YOLO invest. FOMO is one hell of a drug. FOMO makes us do really stupid, irrational things. So if you must succumb, don't succumb with all of your money, succumb with maybe a portion of your money. And my third tip is the biggest and most important of all, and you have to remember this. If you do invest, YOLO, FOMO, you don't want to miss out. I've got to get in. I've got to be involved in this. I've got to be part of history, because this is some of the narrative that I'm hearing at this point in time. You've got to be part of history. You've got to be part of this movement. Then, for goodness sake, please just bear in mind that if you invest that money, you may not see it, but so mentally write off that money. If it comes back and you get a profit, fantastic. But if you lose it, you've got to be happy with that. And that mindset shift is so difficult, because who wants to be wrong? Who wants to lose money? Nobody does. But you have to be prepared, particularly in this instance right now, where there is so much volatility with the share price being pumped up and the shorts doing what they need to do to cover their end. The probabilities that people are going to win and lose at this point in time, I would say, is 50-50. And where this is going to go is anybody's guess. So, guys, if you're going to do this, you cannot resist that YOLO feeling. You have that real FOMO, then make sure that mentally you're writing off what you invest as something that you're happy to just throw away and hope that it comes back to you with a profit. Guys, that's really it. I'm watching YouTube today, and I'm seeing some of this stuff, and I'm seeing some of the comments and some of the questions that are being asked, even in the Reddit group. And it's clear to me that not everybody's savvy. I've had people that I know say to me, well, Pete, I can't believe that you think this way. And surely this is a good thing for retail investors to be able to go up and get one off over the hedge funds. Yes, it is. It is great. It's got a glorious poetic justice to it. I'm not saying that it isn't. I'm not saying that I'm not for that. But at the same time, whilst there are people who know what they're doing, there's even more people who don't really understand what they're doing. And unfortunately, the people who don't understand what they're doing, which is the majority of people, they are the ones who are going to be left holding the bag for this. And unfortunately, that damage could mean that they lose livelihoods, they lose savings, for example, and that potentially puts them off investing for the rest of their lives because they've been stung because they didn't really understand what's going on. So guys, there it is. Let me know what you think of this video. Have I hit a chord? Have I not? Have I been talking rubbish? Let me know. Don't be afraid to let me know in the comments. People often do tell me when they disagree, and that's completely fine. We can agree to disagree, and having these conversations and sharing opinions, I believe, is really, really important as well, especially in the comment section, because at the end of the day, this is a community and I'm here to share my experience, but that doesn't mean that you don't see things in a perspective that maybe I miss sometimes as well, because I do have my financial services hat on for part of this conversation. And if you're not listening to the podcast this week, go and listen to it right there. I clearly outline my concerns, which I don't have enough time to cover in this video, around possible regulations that come down the track. And that for me is the biggest fear that I have out of all of this. And then in that episode, I outline the case for that quite clearly. So go check it out. Thank you again, guys, for watching. Remember, money is a tool, life is for living. I will catch you on Friday.